back. It's 8:24 with mortgage rates at record lows, even under 4%. There's an opportunity for major savings here. Broker Constantine returns this morning to talk about who can save and how. So how low are we talking? How low are these rates?
Another golden opportunity for the refinance or the purchase with 30-year fixed at 4.5% and a little lower in some cases. A 15-year mortgage is 4% and in some cases in the upper threes.
Hey, not bad at all. So let's look at some examples of who can benefit. Now, all these examples we should mention are on a home appraised at $200,000, purchased 5 years ago. So let's start with someone who wants to lower their payment.
The most common reason for the refinance, Lauren, is when they do want to save money per month. So on that particular example, 5 years ago they put 20% down, so they have about $150,000 left on the note. Their current mortgage is 5 3/4. We would refinance it to 4.5%. They would save $153 a month, and the average closing costs, which are rolled into the loan, are about $4,000. So the recoup on the investment is about 2 years, which is average.
What if you want to pay quicker? You want to pay off the house quicker? Yeah.
Well, you only have 25 years left on that loan, so let's take it to a 20-year.
Okay.
Go to a little bit of a lower rate, 4.25%. So you have a current payment of $933. We lower it to 4.25, so you're going to pay $20 more a month, but you're going to knock 5 years off the mortgage and save about $56,000 in finance charges over the next 20 years. That's your second example.
All right. What if people need cash?
Cash out. On this example, there is enough equity to do a Texas cash out refinance, where they would actually take up to $10,000 in this example out, and their payment would be reduced by $100 because we're going to knock about a point off the interest rate from the 5 3/4 to the 4 3/4. You win both times, taking cash out and also lowering your monthly payment. So that's a win-win.
833. All right. So there's a lot of people who don't qualify for this, though.
The 3 reasons: bad credit, honk, not good. Number 2, incomes are down, many debt loads are up. And then, as we were discussing on those examples, there was enough equity to roll into the loan, but sometimes there's not enough money for a down payment or to do the refinance. On the bad credit, 740 and above, once again, especially on 30-year fix, gets the best interest rates.
All right, so if you're one of these people who, is not, has one of these problems, what should you do? What do you do? Obviously, try to get your credit score better. Is there anything else you can do?
Pre-planning is very important, especially if you're self-employed and they're going to look at 2 years of tax returns in average. So a lot of people write off tremendous business expenses. It might be best to show as much income as possible to avoid having the new stringent underwriting guidelines make it difficult for a refinance. And on the cash, in this country, you can still put down 5% and 3% on some government loans for down payment. But in Europe and Canada, it's 40 and 50%. So we still have an advantage. Stash your cash. Gather your documents early, meet with a mortgage advisor in advance, and if you have credit issues, get with a professional to get those straightened out.
Be smart, right?
Be smart.
All right, thank you so much. You can find a link to Paul Constantine's company at myfoxdfw.com. Just click the Good Day tab and then go to links. We appreciate it.
Thanks, Lauren.
I'm glad someone's here to sort it all out. Ahead on Good Day, don't toss away your used vegetable